What up, y'all? What up, y'all? It's the Kristopher Christopher Whitney podcast, KW speaking. Today we're reviewing our market analysis, what I call the morning calls, ahead of the trading day here, which is borrowed from the Bloomberg Intelligence, where I get a lot of my information. Plus, we'll be looking at Wall Street Journal and the Forex markets. But let's hear from the Broadcom president right now while he's speaking. This is valuable information.
In terms of enhancing productivity, more than enhancing productivity, I think even making products, designs that are probably better than you do it with our engineers. And these are very good engineers that we have.
Talk a little bit more about how you're advising your staff to use these different tools, and have you found yourself having to put limits on that? We hear about the era of token maxing, which I hate that term, but the idea of letting people just use without limits tokens. Have you had to put limits on that, and what does that look like?
No, we don't. And frankly, on a bigger picture, we aren't at that stage yet. So maybe it's because we're behind other guys who got to that point and start to throttle on what they do. Yeah. Now, a big part of it is when you use in a tool like Opus 4.7 and the engineers start using it, they go through a learning process, even how to use it. You can't get a tool to be very productive at the start, but as you keep using it and you use it long enough, you get very good at it. And then the tools become much more productive. And as you get much more productive, just think about it. You can get one very senior engineer to produce an application design in 1 week, what it would otherwise take 10 engineers, which we pay at $300,000 a year, and take them 3 months to produce the same thing. The return on investment is still pretty compelling. So to say we're throttling probably is a question of a return on investment and what application you're using. But it is. It's also been able to be trained to be able to use it better and better.
Last year, you announced a landmark agreement to work on AI chips with OpenAI. Could you give us an update on where things stand in kind of bringing that to fruition, in particular addressing what another publication wrote about maybe some snags there, and you're wanting Microsoft to agree to buy a certain percentage of the chips. Just how are things going with finalizing that agreement?
Oh no, by the way, creating chips with partners. Best example, you said earlier, my great relationship with Google. While they try to do custom-owned tooling, it's very, very friendly in a way, and we all have the same goals, competition. We have a great and deep partnership with these guys, as we do with any other, most of our customers, I call it. But it's a journey for them. So the first generation of chip would tend to be replaced by a second generation, which gets better and better and better. So for them, it's a journey towards creating custom AI accelerator silicon to basically optimize on the workload to replace what is the de facto now, which tends to be NVIDIA. We do that, but we only have a few customers, to be exact, 6. Yes. Each of them on a journey, at different stage of the journey, towards creating their own silicon, which they will use. And obviously, Google is way ahead in being much earlier. OpenAI is one of them we've engaged with, and we've engaged now with 3 in over 2 years. It's pretty remarkable how much they've achieved, because we have the AI accelerator silicon working very well in their labs, in their data centers, and we're on track to go into production late this year. And that's it. Off we go to the races.
So there's nothing holding back that partnership at this stage, whether it's needing Microsoft to make any kinds of agreements or anything like that?
No, not at all.
Great. I want to talk about M&A because historically, Broadcom has used M&A in a relatively substantial way. Does the AI revolution sort of temper the need for you to supplement growth using mergers and acquisitions? Are you kind of entering a post-M&A phase, or is that the wrong way to think about it?
No, you hit it right on, Tom. And it's an interesting question. It's a very valid question because it crosses my mind and that of my board on an ongoing basis, not regularly, as do we do M&A. So I'll be very flip and give you a straight answer. In the last 2 years, between 24 and 26 this year, I would be doubling my revenues. I would create over $50 billion per year, annualized, on revenue. I'm looking around, what can I buy? They even come close to that. And that's the tricky part. I mean, it's a distraction. All M&As are distraction to acquire, go to regulators, a further distraction to integrate. Another year. Meanwhile, organically, this phenomenon we call generative AI and our ability to ship them picks and shovels, the compute capacity into this demand, which is almost insatiable, makes it very hard to choose M&A over focusing and succeeding in generative AI compute.
Is there any area where you think you might want to sort of make an exception to this, whether it's maybe photonics, just to name one area?
Photonics? Or you mean optics?
I'm just throwing
Anything.
out. Yeah.
I ran a business model 20 years. I tried to, very hard, I know, try to avoid bright, shiny objects.
All right.
But,
I want to ask you some of the same questions that I've asked some of the other keynote speakers about. When you look at the price sensitivity around token usage and the price sensitivity around, when businesses are prioritizing spending on this, we've seen a lot of companies start to kind of cut back on throttling use of tokens, et cetera, as we talked about earlier. We've also seen indications that certain Chinese large language models are starting to gain a lot of traction, particularly given how efficient they can run, whether it's DeepSeek, the list goes, Alibaba's, Qwen. Are you seeing that at all from your vantage point?
From what I've heard, I can't say we're doing it here in Broadcom, but what I've heard a lot of, and I assume you hear from the same source, a lot of company leaders, CIOs of companies talking about, hey, we're trying to find ways to reduce token costs and all that. And maybe they are ahead of the game where we are. But my sense of enterprise usage of AI, we're still at the early innings of this game. And I think we're still trying to learn what we can get out of this phenomenal tool that we have created and continue to enhance and improve with each succeeding generation. So from my personal viewpoint, as I said earlier, and from the experience running at Broadcom, I don't want my guys to go nuts overspending on tokens. But on the other side, if you can create value out of it, and that you have a return on investment that you otherwise could not, why stop? And this is not going to a video arcade when we are kids and play a game, and at the point when the monster is about to eat you, your gun run out of ammunition, so you feed more tokens. It's almost this, but it's not quite.
I'd be remiss if we didn't talk about the other businesses that Broadcom is known for, and networking in particular. Your gear has become, increasingly important to the modern AI era. We're starting to see other companies like Cisco wanting to kind of play in the areas that you have dominated, and I'm just curious what you think of the prospects for them to kind of, create competition for you there.
Well, we do business in we're very fortunate. I use it very truthfully, not tongue-in-cheek. We have been in semiconductor for 20 years, and we have accumulated a portfolio of about 17 semiconductor product divisions in specific core areas, where we are literally number one or we're not in. We're number one, and we continue to invest. And about 5, 6 of those divisions happen to be very important in creating AI chips and AI clusters.
Right.
So it all became that way. And one of them is networking, as you say, for switching gear. And that's taking off like a rocket. But we also try to be, as we always have been when we sell our products, to be very, I like to call it strategic. When we look at the customer, are they using for a particular purpose? Are they sustainable? Do they want not just one generation, the next and the next and the next, sustainable? And so we prioritize our products to those kind of strategic customers. And demand, as I said, for AI and AI networking today is just massive. So it's okay for us that with such strength and the way we look at businesses, the overflow, I'm happy for it to go to Cisco.
Well, I could pepper you with a lot more questions, but I'm afraid we've run out of time. Hock, thank you so much for being here.
Thank you.
Thanks for your candor. Thank you so much.
All right, that was a great conversation there as we hear from the Broadcom CEO speaking at the Bloomberg Tech Summit. Lots to mull over, particularly given the shadow that those Broadcom numbers and the outlook has cast over this broader AI risk rally. Speaking of which, take a look at how we're trading at the moment as we head into the start of the day here in Asia. New York traded crude looking pretty flat at this point as we continue to mull over these considerations when it comes to the stalemate over the ceasefire. Hezbollah refusing when it comes to this Israel, US and Lebanon brokered ceasefire there, and that broader ceasefire, those discussions, according to President Trump, continuing, even though Iran saying that they have now stalled with the conflict and tensions now being escalated. When it comes to Japan, this is set up for the Nikkei 225, withdrawals are 15 minutes away from the start of trading there, down by just about 0.5% there. We are watching for that steady rotation when it comes to flows away from the South Korean market, which of course has rallied so hard, so fast, and in such a concentrated way, and potentially seeing more of that beneficiaries coming through from the Japanese market. The yen is sitting at around that 160 level. We're now watching for potentially whether the Bank of Japan might actually move sooner rather than later this year. S&P futures at the moment softer by 0.3%, Sherry.
Yeah, Heidi, of course, we continue to watch the rotation potentially here across Asia as well. We saw that big rotation out of tech into U.S. financials. But the sequencing, of course, of some likely IPOs to come will be so important for the tech trade, right? Starting with SpaceX, it set out its IPO pitch to retail investors with a video in which CFO Brett Johnson joins the dots between the company's rocket, satellite, and AI businesses. The 17-minute long presentation is part of the company's efforts to attract mom-and-pop investors from around the world. Let's get more on that with U.S. Deals editor Michael Haitha. Michael, so how is the marketing going now for SpaceX? I mean, the roadshow must be massive right now.
Oh, it's massive, interesting, and quite different, really. I think the biggest thing to think about right off is just the scale of it. As everybody knows, it's now going to be a $75 billion raise. One thing that's really different about it is that 30% of the shares are being set aside for individual, also known as retail investors, and that compares to a normal average of about 10% for an IPO, even large ones. So we're talking about 167 million shares being bought by individuals, about $22.5 billion worth of stock, and that takes a lot of selling to get it out there. And one of the things that's come up, of course, is the banks, the underwriters for it, are in overdrive on this one. But just a few minutes ago, Jamie Dimon finished a simulcast interview with Elon Musk himself, talking about all the plans that Musk has for the company, and that's not something Jamie Dimon normally does from J.P. Morgan. The other banks are scrambling too. We've got there's this whole jockeying among the underwriters. Goldman Sachs has put up these silver rockets that look like SpaceX Starship rockets in its lobby. Morgan Stanley has SpaceX branding all over its lobby. David Solomon from Goldman is coming in and saying that, oh, by the way, they were first, and boasting they've been the longest involved in all this. So it's quite interesting, and it's quite a lot of wrangling about which bank is going to be the biggest participant in all of this.
Yeah, I mean, this must be really a big bragging rights for these banks. What exactly is SpaceX pitching to investors?
Oh, you mentioned the CFO's presentation, that 17-minute, which very, very polished history of SpaceX and its future. And they are really selling the stars on this one, starting with some of the original business. The SpaceX business itself is probably the best known, and is very successful, very dramatic. They're launching a lot of rockets and doing it very successfully. Also, the Starlink business, perhaps less glamorous in a way, but that's what the rockets are going up with, and it's quite a constellation network in space right now, and they are a primary provider of satellite communications. The future is a little bit more unclear, and that's where they make that transition. For example, in that video,
we got 10 minutes left, folks.
The AI portion, which of course is the cash burning aspect of the company right now. They're developing data centers, and that gets played into the next phase, of course, our future of having data centers in space and all of the technological innovation and capital expenditure requirements that will take. And of course, the pitch ends with colonies on Mars, right? Starting with the moon. There's a provision in the incentives for Elon Musk where if they get 1 million people in a colony on Mars, he gets a rather large reward for that.
Michael Haitha, really good to get your insights on SpaceX, editor on U.S. deals with, of course, this very much anticipated IPO. Much more ahead. This is Bloomberg.
All right, let's check out this article real fast, because what it's talking about here is pretty important, especially if you're one of my retired clients. Basically, see if I can get this larger. We're going to listen to it. Basically, for a very long time, we were in a low interest rate environment until basically March of 2020, when they increased the money supply 40% after COVID. I won't get into that, but that plus the conflict with China over the Wuhan lab led to China basically cutting us off, America, from the supply chain. And that created what's called a supply shock. Supply side inflation is caused from lack of supply. But then you add that with a 40% increase in monopoly money, as I call it, you're going to start buying Park Place and all these extra. People start spending. When there's more money, people spend more, drives up prices, and if these prices remain elevated, which they have, they start becoming sticky and they get locked in, like in rents and things like that. So one of the ways to diversify your income is by buying private equity. Usually they're not liquid like normal stocks, but Blackstone had said that you can get all your money back, but now they changed their mind in about face. We'll get back to that. Let's hear Sherry on.
That AI trade, anything around tech, semiconductors, lost ground in the overnight session. So this could be a big theme to watch in the Asian session as well. Let's discuss all of this with Bloomberg Markets reporter Anthony Stevens now watching all of the moves for us in Hong Kong. What will be key today?
Yeah, so we saw a little bit of a pullback in tech on the Broadcom guidance, right? It's important that it was the guidance. So now you see that the bar to further tech gains require very aggressive forward guidance from these companies. But the results are quite strong. So what's happening in the US is this dynamic of broadening economic gains. So people are not selling the headline index per se. They're rotating into industrials, into banks, other beneficiaries of the kind of growth that the US is seeing. So the banks have, the bank index still has not regained its new high on the year. The Dow Jones did crack on to a new high. So you can see the cyclical rotation has plenty of space to go. In Asia, we have a very similar concept with the Topix Banks Index lagging big cap tech by quite a bit despite benefiting from a steeper yield curve. So probably on the Asian session today, we will see Japan banks do quite well. And we must remember, because of years of expansion, Japanese banks are quite exposed to the US markets now and the US economy. So they tend to benefit. Korean banks have also lagged Korean tech a lot. Korean banks are obviously quite exposed to the improvement in the Korean economic situation and the yield curve there as well. So we will probably have this decent round of rotation in Asia as the market cycles higher.
What are you watching when it comes to FX? Are we looking for that dollar yen to take another leg higher?
Look, it's not just the dollar yen, right? Literally the entire region, north to south, is on intervention watch. So we have the yen, we have the Korean won in clear air now, getting record weaker. Indonesian rupiah was record weak yesterday and broke a new big figure at 18,000. And the Indian rupee is also struggling to find a level. What's very interesting about the Indian rupee is we have the RBI on deck today, and their commentary around the rupee and what they can do about it while holding rates is going to be super interesting. So Asian policymakers here have a lot to look at ahead of the non-farm payrolls in the US today. Now that number becomes extremely vital to Asian FX because any strong number, and there have been some private indications that the US labor market is fine, any strong number will put even more pressure on Asian FX. And that matters to the vast majority of the Asian population, and way more than what tech stocks are doing.
Bloomberg's market reporter Anthony Stevens there with what to watch on the markets. And Anthony said that we are watching for those U.S. non-farm payrolls. We'll be watching dollar strength as well. In the overnight session, we had the greenback a little bit softer on lower oil prices, offsetting those Fed rate hike expectations. But of course, we continue to watch that potential intervention from authorities, as Anthony mentioned. In South Korea, we just heard again from Korea's finance minister, Koo Yoon-chol, saying that the government is responding with heightened vigilance. You can see the Kospi futures now pointing to downside of almost 4% right there, and Nikkei futures also pointing to downside of 0.8% at a time when we had seen the Japanese yen now at around that 160 level against the US dollar. Very politically sensitive topic, Heidi, when it comes to the weakness of the Japanese yen, especially since authorities spent more than $74 billion earlier this year to support the currency.
Yeah, let's take a look at how we're watching the broader commodities complex because, of course, we continue to have really a lack of progress when it comes to the ceasefire talks between Iran and the US. And, of course, Hezbollah rejecting the ceasefire that was brokered between Israel and Lebanon, throwing further complication into that mix as well. Oil is pretty steady at the moment, not really doing much after the first decline this week. That optimism clearly starting to fade a bit, but President Trump still saying that the talks are going well. Iran saying that they're at a stalemate at the moment. Gold is also trading pretty steady at the moment. We're also watching European gas prices. They're falling as we continue to see concerns staying focused on enough supply ahead of winter.
All right, we got one more minute, y'all. It's going to go probably to a quick commercial and come back, and we'll see how the open is for Friday. Meanwhile, back at the Hall of Justice, we listened to the Blackstone investors ask to pull $4.4 billion from private credit fund. The one I was talking about earlier. One of the ways that advisors can diversify clients' bond section of their retirement portfolios or a portfolio in general, if it's taxable perhaps, is to take a chunk of that bond section and put it into what's called private credit funds. And these private credit funds are not liquid like a normal stock or ETF security where you could just sell it right away normally. These you have to put in a redemption request and they're scheduled usually once a quarter, and then the actual payout is like about a month later or a couple weeks later. The board assigned to this then decides how much redemptions they're going to do. Generally these funds have a 5% cap because in order for them to raise the money they need, they have to get usually a line of credit from a bank because they're invested into income producing real estate that can't just be sold right away. Anyways, let's get back to the program. We'll get back on this. Let's hear what they say.
The real negotiation is going to begin now.
Definitely, the president has brought the aid.
It's just another commercial. And so anyways, Blackstone they're pretty much they are the biggest in private credit funder here. But what they try to do is differentiate themselves from the crowd, because these type of funds have become very popular because like I said, before March of 2020, we were in a very long, low interest rate environment, especially after 2008 when they had to lower the rates again. Now, these credit funds, so Blackstone, long story short, Blackstone said, okay, we'll give all the redemptions. Probably because of their huge scale, they felt like they could do that. But then when the redemptions became large, like 4.4 billion, they said, never mind, we're going to cap it at 5% again. So I would like to hear what their justification is on that. I know because I've advised my clients, and we've done well. I like the Blue Rock Total Income Real Estate Fund, for instance. Normally you need $1 million minimum investment, but if you have an independent advisor like me or a firm that participates, they can aggregate all their customer accounts as long as they add up to more than $1 million. And then clients can get investments, otherwise they wouldn't be able to normally. I count as one client as a proxy for my book of clients. Anyways, this here, Sherry on, this is important.
From tech to financials, but this, of course,
that was
after the
important
Philadelphia Semiconductor Index already rallied more than 90% year to date. We did get a little bit more caution given Broadcom's
old school stocks.
Yeah, the question is whether this is kind of the start of a trend, the proper sort of broadening of this market and the rotation away from just such highly concentrated trade, right? Particularly when it comes to markets like Korea, like Japan, like Taiwan as well. Are we starting to see a little bit more of a broadening in this market? But still, of course, geopolitical concerns still very much at the forefront there as well. We've also got US jobs numbers to contend with and some worries about more Fed tightening on the agenda too.
Yeah, plenty for markets to digest. But on that rotation, to your point, Heidi, when it comes to Japan, we'll be watching the Topix Bank Index as well because it's already at the highest levels since February. Take a look at the open right now because the Japanese yen still holding at that 160 level against the US dollar, despite the fact that authorities here have spent more than $70 billion earlier this year to support their currency. We have
$70 billion.
Mr. Katayama saying that she will refrain from commenting on the FX levels, but at the same time, she talked about not clearly having a direction when it comes to those sales tax cuts when it comes for food here in Japan. But at the same time, she said that they will not be using more debt. So do watch out for JGBs, the 10-year yield holding at that 266 level. As a Nikkei and the topics, a little bit of divergence, as you can see there, with Nikkei stocks falling 0.7%. And as I said, do keep an eye on those banks.
Purple's
and of course,
color,
we did
girl.
get some wage growth data earlier this
Looking good
morning,
today.
and we saw them beat all economists economists' estimates. So we will be watching the June 16th Bank of Japan policy decision. The expectation is that they might hike from Bloomberg Economics. Take a look at
Sherry,
how South Korea is also opening because, as I said, we have that pressure when it comes to the tech sector. So we'll be watching names like Samsung, like SK Hynix as well. The Kospi now falling more than 4%. And this as we also got the current account surplus narrowing slightly for the month of April. But this, of course, after touching record highs already in the previous month, given all of the semiconductor exports. The Korean won still weakening past that 1,500 level against the dollar, Heidi.
Take a look, Sherry, at what we're watching when it comes to the outlook in particular when it comes to oil, right, as we continue to wait for further progress on these geopolitical discussions. Pretty steady at the moment. In fact, not much of a move at all. The first decline that we've had in this week, though, on that optimism between the US and Iran holding these talks, that tentative ceasefire between Israel and Lebanon, of course, which has been pushed back upon by Hezbollah, potentially this optimism that we'll see energy flows resume through the Strait of Hormuz. But the reality seems to be that we're quite far from that, despite President Trump saying that the talks are continuing to go well. This is a picture when it comes to treasuries. We also saw that rise in the overnight session with the dollar slipping as investors drawing on those prospects for a peace deal. But those yields have been pushed lower by 2 to 4 basis points, really across maturities, as we saw that slide in oil as well. But of course, we're setting up for non-farm payrolls in the US, a whisper number looking a little bit higher than what we had been previously expecting, and whether or not that's going to set up for sort of more heightened expectations for sooner than expected Fed tightening as well. So Brent crude at the moment, we're seeing coming online just about 0.2% higher with that trade. And Australia, just a couple of minutes into the start of the session, taking a very slow approach there, despite futures showing a little bit of a gain of about 0.5% at the open. Let's bring in George Bourbouris, who's a managing director at K2 Asset Management. George, really great to have you with us. So there's so many sort of cross currents as to what's going on at the moment. But let me get you started on the tech view. Is this a true sustainable rotation that you think we're starting to see, given so many questions have been asked about the concentration of this rally and the loftiness of valuations?
Yes, good morning, good to be with you. Yes, we believe the broadening out is the trade. We, like many active managers earlier this year, broadening out, looking for that opportunity from AI, the tech sector, with the benefits of productivity in utilities, healthcare, broadly financials and other parts of the economy. So we are looking at that mid-cap broadening out and obviously the other key sectors. Now with the concentration, the thing to reinforce here, this is an extraordinary time, I think, in financial market history, but these earnings have been so significant and historical. The E is coming through the denominator and the P is just matching it. So just to reinforce is that it is extraordinary what's happened, but these earnings are extraordinary. There is, while you can't say there's crowding out within the private sector, it's really a public-private sector debate. But within the private sector, there is this concentration of finite capital going to the equity part of that investment, and obviously all parts of the capital structure, because debt issuance is dominated again by chip making and AI and obviously equity returns. But the earnings are coming through. They are historically high. It is matching the P, so the multiples are justified on this extraordinary earnings. Therefore, having said all of that, it seems logical and consistent that broadening out has got some benefits for the broader economy and that productivity gain that you're looking for in the US and other parts of the world. So hopefully that narrative makes a bit of sense from an investment point of view.
George, what are your thoughts when it comes to this pipeline of mega tech and largely AI-centered IPOs, right? Obviously, SpaceX, OpenAI, Anthropic before that. We also have the massive fundraising by Google. Do you think it's meaningful for markets in terms of being a test of liquidity and of investor commitment to the theme?
Yes, in short, and just reinforcing the following. The upcoming IPOs is going to continue the trend that is quite historical, and that is equity participation's increasing. The whole globe is all in on US equities and US AI and US chip making and those earnings that are coming through. The whole debt issuance platform is dominated by that sector at the cost of possibly sovereigns and some municipals, but definitely other senior unsecured debt issuance. So there is, again, reinforcing finite capital in the top part of the capital structure to the bottom has been allocated to this sector. The diversification has been happening for 6 months or so, and some even longer for some. But it's going to attract more new capital that's chasing this, or the beta component. So this trend seems to continue for now, and many active managers will continue to take some profit where they can, and again do the broadening out trade to the mid cap, broadening out trade to the other sectors or other asset classes for that matter.
We, of course, have these markets across Asia that are very heavily concentrated on big tech names. And then at the same time, we have the ones that don't have that much tech exposure, that have lagged behind this incredible rally that we're seeing globally. Could we see any more diversification or broadening out in terms of different market regions? Because we have seen the likes of, say, Indonesia, the likes of India, for example, being some of the worst markets performers right now.
Yeah, no, good to highlight those. So from our perspective, on retracement, we like Nikkei, we like Kospi. It's been a real volatile run with the Kospi, and that rally's been historical year to date. We like Singapore as that hub, and Australia because it's got that large oligopolistic earnings coming through, the high payout ratios and the dividends coming through. Specifically in Indonesia, that it continues to be a short for Indonesia, that currency weakening, flight of capital. They just need to get reform consistently. They need to go on top of their reform from an economic perspective for the long term. It's just not happening. They keep disappointing investors, and they're obviously exiting onto the sovereign market from Indonesia. So that short to Indonesia will be maintained until they can get on top of some meaningful economic reform in there. Having said all that, it's a great country, of course, and with that weakening currency, the tourism sector will be the big beneficiary of it. But from an economic point of view and an investment point of view, from a debt or equity, Indonesia is not the place to be. Similar to India, it's just not the place to be searching for those returns. They just need that more broad-based economic reform and or access to some key tech sectors of those earnings. And on the debt side, can't find a positive story to be going overweight India. But nevertheless, Southeast Asia, there is opportunity, in North Asia, but just to reinforce, we prefer, where you can, Nikkei, Singapore, Kospi on retracement, and Australia as an index weighting.
George, you're talking about a great time, a good country to go to. Well, that's been the play here in Japan as well. We have so many tourists and a lot to do with the weak Japanese yen. In fact, the finance minister Katayama speaking right now saying that they're looking at the oil-related impact on currencies, that it's large. She keeps reiterating that, but at the same time, of course, we're watching for potential intervention given that we're at that 160 zone. Is the future of most Asian currencies just more downside at this point, given just the fundamentals with positive surprises coming from U.S. economic data, safe haven plays, even South Korea, such a strong market right now, and you have the Korean won way past 1,500?
Yeah, very sympathetic to the theme of that question. Let's put Korea aside because of the capital controls and QF2 status, but let's just go straight into Japan. They've obviously made it clear that 160 is their intervention. So the framework I'd like to roll out is that there's structural weakness for the yen to continue with pockets of intervention to prevent that being just a one-way. So intervene at that 159, 160 level, get it towards that 156, intervene again until it structurally gets weaker over time. Given that they remember the BOJ would still like to somehow continue to maintain the narrative and to deliver higher nominal rates from the cash all the way out to that 2-3 year. So on that framework, which should be supportive of it, but there's many other moving parts. So structural weakness for yen with more yen intervention to prevent that being just a one-way play. But this time next year, still see a weaker yen, but bouts of rallying, lots of periods of that going forward. And that's a theme for all parts of capital structure, all asset classes. More pockets of volatility are the norm for active managers right across the place, right across the geography, by capital structure, by asset class, etc. More pockets of volatility, but structurally weaker Asian currencies with rallying and small pockets of that in the short term.
George Babura, it's really great to get your insights. Managing Director of K2 Asset Management, as we continue to watch all of the moves here in Japan, because Prime Minister Takaichi is also speaking in Parliament right now, saying that the economic fiscal policy is not targeted at the currency itself, that the investment strategy here in Japan will actually help maintain trust in the Japanese currency, according to Prime Minister Takaichi. This coming on the back of comments also by the Finance Minister Katayama that the macroeconomic policy is among factors affecting FX. Of course, we are expecting a rate decision by the Bank of Japan on June 16th, and right now market pricing implies more than 80% odds of that June rate hike. And with that, we're actually seeing expectations of perhaps more gains for these banks on rising rates. You can see right now on top of that, the Topix Bank Index trading at the highest level since 1997, being helped also by that massive rotation that we saw in the U.S. session out of tech into financials. More ahead, this is Bloomberg.
All right, that was some good information there. Okay, I'm going to summarize what we just viewed, and but I want to get back to this real quick. Blackstone reneging or reversing on their decision to pay out all requests is a signal that people should be paying attention to, because it's been commonly noted in the industry that private credit has been it's like a hidden bubble. Basically what they're saying, and it could get ugly potentially, but that narrative has been going on for quite some time now and has not materialized. Kind of like all the doomsayers were expecting a market crash like 2 years ago, and so, but that market crash never came, and things like that can go on for a while, and so you got to be flexible, you know. But let's hear what it says. Let's see if they can't pick up something.
Blackstone investors asked to pull $4.4 billion from private credit fund. Fund caps client redemptions at 5%, an about-face from firm's decision to pay out all requests earlier this year. By Matt Wers. Follow. Updated June 4, 2026, 2:58 p.m. Eastern Time. Blackstone's withdrawals are being watched as a gauge of whether investors continue to race for the exits. Richard B. Levine/Levine Roberts/Zuma Press. Investors are trying to pull more money from the biggest private credit fund in the world. Investors in Blackstone's BX 7.5% flagship private credit fund, known as CRED, asked to redeem 10% of their shares in the second quarter, up from about 8% in the first quarter. That amounted to investors asking for $4.4 billion. Copyright 2026 Dow Jones and Company Incorporated. All rights reserved. 87990CB856H18D5 EDAC 44C7B1 debate. Continue reading your article with a Wall Street Journal.
All right. So we'll keep our radar on that one. See what we got here. Crypto Boon has downside. Let's see what that has to say.
The boom in crypto ETFs has a downside for investors. Investors face higher costs and the unwelcome prospect of fund closures as more digital asset funds come to market. Bye.
Well, let's hear this. This probably get some good information.
In the latest Israeli strikes, let's get more from our senior White House reporter, Mika Solna. So, Mika, two kind of fairly different realities that we're looking at here.
Whoa. Hezbollah?
Yeah,
Are they in charge of Iran now?
There's a lot of confusion and mixed messaging right now in terms of where things actually stand when it comes to the timeline.
How are they in charge of Iran?
US military operation, this war in Iran, waged by the Trump administration. Of course, we heard the president say today, and it continues to say that strong progress is being made to end this operation and complete it, and then soon this will create a boom from the economy. But we're also hearing from the Middle East that there's nowhere near a deal. So I think it's a lot more complicated than what's being put out there.
Yeah, exactly, especially since Lebanon remains a key sticking point,
Trump
and it seems that ceasefire might not be holding.
entire system? I told all the leaders.
Lebanon certainly complicates things,
How
given
are they
the fact
gonna
that the U.S.
think they
is
can
trying to
negotiate
broker
anything?
essentially simultaneous peace deals now. And I know that Hezbollah has rejected
Trump,
the ceasefire
wipe them
agreement
out,
between
man.
Israel and Lebanon. And though
We're
Hezbollah is
tired of
not an
them
actor in the peace
committing
talks
genocide.
waged by the U.S., they
Wishing
still
death
matter
to
because
America.
they're backed by Iran, as we know.
The whole world's
this
tired
really,
of them.
you know,
They bombed
puts
all
kind
their
of a wrench
neighbors.
into things. I think
China
that this
and
is
Russia
going
ain't coming to their
to
aid.
complicate things a little bit more in terms of getting a quick peace deal done here. So right now, things are still in flux as this war wages on for more than 4 months now.
baby.
Are there any indication that the president is feeling the heat domestically?
Yeah, I mean, there's still a lot of Americans out there that are feeling the economic pressure. The gas prices are still high. They've come down a little bit, but they're still very much in flux.
We've already won.
Here,
we killed their supreme leader. All their leaders, captains, generals, don't even have a leader.
They're really going to feel this
in
their
their pocketbooks.
The president is going to go to Wisconsin tomorrow to campaign with the House Republican.
So he's going to win stuff.
We should be hearing more from him on that front and maybe get another update on where things stand then.
So what's next in the ongoing negotiations then?
Sherry, on color out, please.
You know, I think that we may see more this weekend. We'll definitely hear more next week. But I think things have really remained kind of at a stalemate for the past week or two. After there was some momentum that the White House was seeing, saying that this was probably going to wrap up very quickly. But I do think that this is a lot more difficult to get done right now, with the president really not letting down on his demands.
Who's this guy?
You know, the ceasefire is existing, but there's still missile strikes, as we know, so it's very, very fragile. So every day we're waiting for updates from the president. He's pretty much spoken on it every day since the start, but we'll continue to monitor things as they
their leader now? Because no one in the media, no news outlet has announced
joining us from Arlington. And here's another conflict that we're watching right now. Ukrainian President Volodymyr Zelensky now saying that he proposed peace talks with Russian leader Vladimir Putin. Zelensky made the offer in an open letter saying Ukraine is ready for a full ceasefire during negotiations.
Yeah, well,
Putin has
$350 billion unaccounted for taxpayer dollars.
And
we didn't want this war in the first place.
They cannot be none of our business when actively supporting Ukraine. President Trump, though, has welcomed Zelensky's initiative.
I'm glad that they're maybe talking about meeting. I think we had a lot to do with it. I know exactly what you're doing. But I think it would be great if they met. They should get it done.
Silicon Valley's top value defense tech startup says it's expanding production of AI and autonomous weapon systems for the U.S. military. Anduril Industries co-founder and executive chairman Trey Stevens spoke to us exclusively at the Bloomberg Tech Conference about how the industry is evolving.
For that war that we didn't want?
We have this defense ecosystem that's dominated by a handful, 5 or 6 large defense companies that have been, kind of a consolidation of the entire defense industry that existed during the Cold War. And the capabilities that we have are really incredible.
Under the Democrats.
We have these amazing, exquisite defense systems.
So those deals were brokered.
Ford-class aircraft carriers and the Joint Strike Fighter, the F-35, the Patriot missile. These platforms take decades to develop, build, and hundreds and hundreds of billions of dollars to sustain. So, for example, like a Patriot missile, which was initially developed in 1969.
More reason not to do it.
Like kind of the creme de la creme
a massive
of
national debt problem
for counter-air capabilities.
We got all kinds of problems.
This is like it's a 70-year-old system at this point. Every missile costs millions of dollars, literally like between $2.25 to $5 million
on a per unit
basis. And these were built to shoot down MiG-29s. When you're shooting at an airplane that costs tens of millions of dollars, you can afford to shoot a $3 million missile to do that. This is not the nature of threats as they exist today. And so Anduril, when we came on the scene, our goal was to figure out ways that we can introduce software, autonomy, on the production side of the house, as well as on the kill chain, the tactical side of the house, to massively reduce the cost of engaging with a modern threat profile. And so when you look at something like the war in Iran, most of the threats that we're seeing are low-flying cruise missiles or Shaheds, which is sort of like a loitering munition. These are, generally pretty slow, but they're, mobile, dynamically controlled. You don't want to shoot a $3 million cruise missile at a $200,000 weapon. The economic trade-off is bad. And so, we originally started working entirely in kind of the surveillance reconnaissance space, and now the kind of plurality of a lot of our work is actually related to air defense, lowering the cost of engaging with threats that are incoming to not only the United States, but also our allies and partners in the regions around the world where these threats are most present.
That's an interesting point on not just the United States, because there are deployments, Vanderbilt technology in the Gulf as an example. You yourself, you have been and will go very soon to the Middle East. How does that work in practice, being an American company that serves the U.S. military and the Department of Defense, but also allies? You must spend a lot of time meeting with the defense apparatus and governments of other nations.
Right. Yeah, I would say it's like one of the most common questions we get on ethics. These are important questions from new employees, younger people that are, talking about joining. They'll lean forward very dramatically and say, how do you make decisions about where we sell our capabilities? And I'm like, well, it turns out there's this whole thing called foreign military sales. That actually the United States government decides where our things get sold. So those are very clear rules. It's not like I'm making a decision about I really think we shouldn't sell to this country. It's like, the government has already kind of pre-decided that that's the case.
Well, now we have this thing called request for proposal
policy in a bipartisan way.
Fiduciaries are supposed to do to get the best bidder.
In a bipartisan way, it's important for U.S. foreign policy
not hand out government contracts
to
probably as a bribe
to make sure that they are fully integrated into our joint operations, which is really
political donations,
but also that they have the capabilities to defend themselves, utilizing U.S. production that may or may not exist in many of these countries. Like they don't, our allies, many of them, are not going to fund and build a fifth-generation fighter plane on their own, nor are they going to develop really complex, multi-million-dollar counter-air missile systems. And so this is a role that we play in the ecosystem, is to go out and say, to countries like Ukraine or like the United Arab Emirates or Saudi Arabia or Qatar, hey, the United States has the capability. We want you to have that capability as well. And this is how we're thinking about the cost curve for deploying these capabilities and kind of the layered approach that you can take to reducing the cost per intercept or whatever it is. Now, the tricky thing about all this is that there's a big difference between being a startup that is designing and developing a capability, which is great. And there's a lot of really interesting efforts that are happening there.
Democrats
and being
behind
a producer of those capabilities. And this has really been the name of the game for Anduril over the last few years, is transitioning out of just being like a really innovative technology company and focusing almost all of our effort on how do we produce at scale in a way that allows us to not only supply the U.S. customer, which is our primary customer, but also be supportive of that foreign policy mission and supplying those same capabilities abroad.
Anduril Industries co-founder and executive chairman Trey Stevens there speaking exclusively to Bloomberg's Ed Ludlow. We are getting some breaking news when it comes to how it's all playing out when it comes to Korean stocks at the moment. The Kospi extending that early decline to 6% now as we see that extended slump in chip makers, opening sharply lower just about 25 minutes ago. It was already down more than 4% in the early part of the trade. Chip makers extending those declines as we really kind of see this relentless rally in semiconductor stocks, meaning that every intraday dip invited heavy retail buying, increasingly that use of leverage as well to amplify that impact. This will be a real test when it comes to whether we'll continue to see that again. This really reflecting the sell-off that we saw and the broadening, the rotation away from the AI names. The NASDAQ futures also extending the overnight declines there.
I see that here too.
We'll continue to monitor whether this rotation continues through other Asian markets as well. More ahead on the Asia trade. This is Bloomberg.
All right. I want to check this. Okay, so we listened to Bloomberg, mostly Democrat. We looked at Wall Street Journal, Republican. Now let's look at an independent kind of libertarian platform. This platform, you got to take it with a grain of salt. They're like permabills, but they're great for getting the lowdown on quick information, and they use a lot of analogies, and they're kind of cynical, but in a funny way. So if you're a financial person who likes financial humor, then I'm sure you'll be entertained. Let's check it out. Focusing 100% here. Okay, that looks better. All right, go.
Trump softens red line, no reason to retrieve Iran's nuclear dust as it's effectively entombed. By Tyler Durden. Thursday, June 4th, 2026, 2.
By the way, this news provider is called zerohedge.com. Hedging, is a way to mitigate risk in portfolios and in general. When you don't use a hedge, that means that you are confident. It could mean other things too, but that's too much for this for the scope of this video here. But they are an authoritative source, albeit can be a little bit. The wording can be what some may think hyperbolic slightly, a little bit, but their information spot on a lot of times. I mean, they recalled a lot of good stuff. So let's hear them out. You can decide for yourself.
2:59 p.m. Summary. Trump remarks suggest the fate of Iran's stockpile of enriched uranium is no longer be the central issue it once was. Hezbollah chief rejects outcome of Lebanon-Israel talks, insisting that a truce must encompass whole country. Wall Street Journal reports that the White House intends to maintain a ceasefire with Iran unless American troops are killed. Oil drops also after Trump states on TS. Trump lashes out after House War Powers votes passes Wednesday evening, attacking especially 4 Republicans who voted in favor. Trump downplayed Iran's attacks on U.S. bases in Kuwait and Bahrain, saying they were slightly provoked, so they were reciprocating. Asterisk asterisk asterisk. Trump suggests enriched uranium no longer a central issue for him. Trump's Thursday late afternoon remarks to reporters suggested that the fate of Iran's stockpile of enriched uranium may no longer be the central issue it once was. Asked about reports that the U.S. could attempt to seize or recover Iran's remaining nuclear material, Trump repeatedly downplayed the prospect, saying there was no reason to retrieve what he called Iran's nuclear dust because it is now effectively entombed. The president stressed that Washington is not considering any covert operation to seize Iran's uranium, adding that the U.S. already has powerful cameras watching Iran's uranium and remains confident in its ability to monitor the situation. While Trump at one point boasted that America and China are the only countries capable of recovering the material and suggested we'll get Iran's nuclear dust, his broader message now seems that the stockpile no longer represents an urgent concern. Instead, Trump framed the dispute around a much simpler objective, ensuring that Iran never obtains a nuclear weapon. He reiterated that the main part of any agreement would be that Iran can't have a nuclear weapon, while adding that a broader deal could also include guarantees regarding the Strait of Hormuz remaining open to global commerce. Expressing optimism about diplomacy, Trump again said talks with Tehran are going well and suggested that a successful agreement could even lead to a personal meeting with Iran's supreme leader. I would be honored to meet the Ayatollah, he remarked, adding that if a deal is reached, Iran won't have a nuclear weapon. At the same time, Trump declared in an oddly stated reference that the U.S. would ultimately prevail on paper or militarily.
That's what I want to know.
He warned that any future attack resulting in the deaths of American troops would trigger a rapid return to hostilities, while asserting that Iran's military capabilities have been severely degraded. Trump claimed Tehran has only a handful of missiles remaining, reiterated that Iran effectively has no navy and no air force, and even said the U.S. possesses photographs of sunken Iranian vessels. He further boasted that Washington had wiped out almost all of Iran's leadership during the conflict. On regional tensions, Trump linked developments in Lebanon directly to the broader confrontation with Iran, saying the various fronts are interconnected. He disclosed conversations with Israeli Prime Minister Benjamin Netanyahu regarding Lebanon and expressed hope that the country could finally enjoy some peace. Trump also claimed that Hezbollah had contacted the United States during the crisis. IAEA, Iran nuclear risk higher than when war began. Stating the obvious. According to Bloomberg, the International Atomic Energy Agency, IAEA, has published a restricted document which reveals that the nuclear risk posed by Iran is now higher.
According to Bloomberg. Remember that. Bloomberg is, when it comes to political, they're pretty biased. Everything else are great, though.
Trump softens red line, no reason to retrieve Iran's nuclear dust as it's effectively entombed. By Tyler Durden. Thursday, June 4th. According to Bloomberg, the International Atomic Energy Agency, IAEA, has published a restricted document which reveals that the nuclear risk posed by Iran is now higher today than it was before the war began. Specifically, prior to the war, the IAEA was allowed to inspect Iranian-enriched uranium, but such inspections have since largely halted. However, it should be noted that the IAEA was always only inspected where the IRGC told them they were allowed to, and many suspected that nuclear proliferation was happening behind the scenes, in facilities that were not accessible to the IAEA.
Many suspected. That is fact. We have all kinds of... Anyways, that's a fact. There's so much evidence of that. Bloomberg, come on, man. Your audience is in the know. They're people like me who've been monitoring the financial media, not the mainstream, the actual financial media for a long time. Me, 20 years plus. Plus, I went to college for this. Board certified, principal, got all these licenses, blah, blah, blah. I'm just saying that's BS. But anyways, go ahead.
IAEA. Hezbollah rejects outcome of Lebanon-Israel talks, Secretary General. Hezbollah Secretary General Naim Qassem in new speech rejects the Washington-mediated conclusion to direct Lebanon-Israel talks. Naim Qassem has warned that Israeli areas across the border will remain under threat as long as the Lebanese people and villages come under attack from the Israeli army. He also rejected attempts to tie the group's deployment to wider political arrangements, saying the group refuses any link between Hezbollah's presence and a ceasefire, or Israel's withdrawal. Some highlights from Qassem's address. The revolution in Iran was launched from an Islamic background on the principles of...
Wait a second, what was that in this part? Who? Hezbollah Secretary General Nazem Qassem? In new speech rejects Washington-mediated conclusion. How can they reject anything? Their leader is wiped out. They have nothing. They have no... You can't negotiate without any cards to play. Like, what the... That reminds me of Monty Python, and the Holy Grail, that old movie that came out in the 80s, where the knights that say "ni." Remember that one? And then Sir Arthur whoosh, cuts off his arm. He's like, "Oh, it's just a flesh wound." And he comes at him again, chops off his leg. He's jumping around one leg, chops off his other arm. He's like, "I'll get you." Then he chops off his leg, and he's just like paraplegic on the ground. He's like trying to bite him. It's like, give it up, man. That's what pride will do to you, though. Pride will make you do dumb things. That's why you don't acknowledge a fool. You just go, walk on. If they touch you after that, then you have the right to defend yourself. You know what I mean? Anyway, back to the subject here. Okay. Well, we get the point here. Let's fast forward to the summary here.
Trump softens red line, no reason to retrieve Iran's nuclear dust as it's effectively entombed. By Tyler Durden. Thursday, June 4th, 2020. Pushing Lebanon truce toward goal line. In Lebanon, there is some remotely positive news, with Lebanon and Israel saying had agreed to implement a ceasefire during talks in Washington and overseen by the U.S. However, once again the deal is contingent on Hezbollah agreeing to the ceasefire. That ceasefire is conditional on Hezbollah also stopping fighting, but in theory, the news helps to take out a key sticking point in the U.S.-Iran talks that was holding up a deal. So that's seen oil prices reverse a run of 3 days of consecutive gains, Deutsche Bank analyst Henry Allen stated in a research note. Trump rages at House's successful war powers vote, which could portend a political shakeup going into this fall's midterm elections. Some more latest developments. Via Al Jazeera. Hezbollah boss warns North Israel won't be safe if Lebanon bombed. Several people have been wounded in an Israeli drone attack on a vehicle after Israel and Lebanon officials agreed to halt the war during a series of meetings in Washington, D.C. Before the truce announcement, Hezbollah said it launched a salvo of rockets at Israeli soldiers in southern Lebanon's Kantara, and fired drones at troops near the strategic Beaufort Castle. The U.S. House of Representatives passed a resolution to rein in President Donald Trump's powers to attack Iran without congressional authorization in a vote of 215 to 208. Overnight Israeli airstrikes on an apartment block in Gaza City killed at least 9 Palestinians with 4 children among the dead. Iran's foreign policy a consensus process but supreme leader gets final say. 53, 78, 21, 690. More geopolitical stories.
Iran's foreign policy consensus process, but supreme leader gets final say. Okay. Who is the supreme leader, though? There is no supreme leader to give final say. Why even say something that is... Anyway. Let's see what's up with Zelensky here.
Zelensky pens lengthy letter to Putin, enough of war, I am proposing a meeting. By Tyler Durden.
Oh, now
Thursday, June 4th, 2026, 2:20 p.m.
Cash flow.
On Thursday, Ukrainian President Volodymyr Zelensky proposed a face-to-face meeting with Vladimir Putin in a rare open letter sent to the Russian leader. It said Ukraine is also ready for a full ceasefire. Ukraine proposes ending this war through direct engagement between us and you. I am proposing a meeting, Zelensky said in the letter. Ukraine is ready for a full ceasefire for the duration of the negotiations, he added. The letter, which is somewhat lengthy at one point, says, the choice is yours now. Enough of war, and then spells out that Ukraine proposes to end this war. This must be done honestly, with dignity, and with guarantees that the war will not be reignited, Zelensky added. And then interestingly, we see that the United States is fully focused on the issue of Iran, and it would be wrong to simply wait until the war in Europe returns to the center of its attention. Via AP/The Hill. The new letter was issued just Europe's most influential powers of Germany, France, and the United Kingdom are trying to again jumpstart Ukraine war peace talks, collectively operating as the E3 group. They seek to implement a new framework aimed at engaging Russian President Vladimir Putin in direct negotiations to end the war. Reuters on Wednesday reports that a window for dialogue is slowly opening between Russia and Europe on Ukraine, although it is likely to be months before talks can begin, a German government official said at a briefing on Wednesday. It seems this window of opportunity is based to some degree on perceptions that the war tide and momentum is finally shifting in Ukraine's favor, given the increasing effectiveness of Ukraine's devastating cross-border drone attacks of late. European leaders apparently view the current battlefield and political dynamics as having strengthened Kiev's bargaining position, creating what they believe is the optimal moment to press Moscow for talks. It seems that Zelensky agrees, and believes that it's time to get back to the negotiating table. Putin on sidelines of the ongoing St. Petersburg International Economic Forum, we can control whole Donbass region and strike a deal. One thing doesn't contradict the other, why would you think that it does? Putin to AP News Director. We can control whole Donbass region and strike a deal. One thing doesn't contradict the other, why would you think that it does?
Putin on the sidelines of the ongoing St. Petersburg International Economic Forum, and we can control the whole Donbass region and strike a deal. One thing doesn't contradict another. Why would you think it does?
Does? Putin to AP News Directors, //t.co/T9H7QSH7G4P IC.twitter.com/9WACC6M600.
There's no need to stop
RT at
fighting in order to start
RT_com,
talks.
June 4th, 2026.
True.
Putin also said Thursday that his view is there's no need to stop fighting in order to start talks. Below is Zelensky's full newly published letter, kept in the original formatting, and is issued in an official English version. *****. Open letter. To the President of the Russian Federation. From the President of Ukraine. When you came to power in Russia more than 26 years ago, many people in Ukraine viewed you positively. That is how it was. But that is now in the past. Now, the overwhelming majority of Ukrainians view it positively that our long-range drones paid a visit to the open...
Okay. We're not going to read the whole letter. Let's just hear the summary.
Zelensky pens lengthy letter to Putin, enough of war, I am proposing a meeting. Despite the long appeal, Despite the long appeal, President Putin and the Kremlin have demonstrated a willingness to allow a long war to drag on, and are unlikely to be moved. Putin has said there's no need for a truce unless a deal is already close or about to be signed. But the two sides aren't any closer to being at the negotiating table as yet. 28.
There you go. It's just lip service. But we'll see. The Russians are not one to back down easily. Oh, that's a different one. Okay. All right. Let's sum this up here. Okay. Take a look at my notes. All right, y'all. Okay, so video started out. We had the Broadcom CEO giving an interview at the conference. He talks about the phenomena we call generative AI compute. And in their earnings, they said they haven't done any revisions to their earnings, but the market seems to be taking it that way. As you just saw, the tech sector selling off and there's rebalancing. People are selling their AI stock gains and then moving that money into other sectors like mid caps and banks, as we saw earlier. Okay, then we start talking about the Japanese yen and the South Korean yuan. Excuse me, that's the yuan is different currency. South Korean won. The rally, basically in these indices, has gone basically gangbusters as of late, and so they're outside of their normal range, and that is a signal to rebalance. It's time to sell those, take profit, move them into other sectors, ones that have been laggards but still are fundamentally sound. And we see that, and that's what they call a broadening out. The breadth, BREADTH. It's like the scope of the distributions of earnings and what people are buying and allocating their money to, so on and so forth, has been narrow. A narrow breadth in the market is kind of like what we saw in the .com, where all the earnings were just coming from the tech stocks, and so that's where the money was going and nowhere else. And sometimes that becomes a self-fulfilling prophecy, so to speak. It's a feedback loop. Well, there's signs here that it's run its course, but Broadcom hasn't adjusted their earnings expectations. So but anyway, next we got the SpaceX IPO. They put out a cool video. I was going to capture that, but I would just recommend you Google it, see what they say. Probably pretty interesting. I saw they showed a clip in it earlier, and it showed the SpaceX. It has that big open building with glass, and they're watching all the computers. It showed that, and people were cheering, and it was very motivating and inspirational. Check it out. It was probably pretty good. All right. But the point to that is that is a sign, a positive sign, and a signal in the industry. Okay. We got the Japanese yen at 1.5998, almost the 160 level, kissing that critical 160 level. The Bank of Japan usually will intervene at that point, and they'll start buying their currency if it gets too weak. And if that happens, yen traders are at risk. They used to call it the Widowmaker trade when Governor Kuroda was in office, and it was so funny. Like, even when they interviewed people, they couldn't stop laughing because Governor Kuroda would wait until like a holiday when there's low liquidity, when people are not trading, and just out of nowhere buy like $50 billion worth of yen, and then all of a sudden you'd see the yen just take. U.S. dollar yen tank, which means that the yen being in the denominator of the equation and U.S. dollar being a numerator, since the yen is strengthening and the denominator is pushing the pair down in the chart. And so we may see a retreat of that. In fact, it's happening probably in real time right now. Take a look. This is the Australian dollar, Japanese yen here, but pretty close. But let's just pull up the JPY. Okay, let's pull up the daily chart. Each candlestick is 1 day. catch up here. Come on. It's tinking. Wait. Okay. While that's thinking, I'm not sure what's the deal on that. Let's just look at the yen here. Oh, okay. It's back online here. Let's look at both. Okay. FX, yen, 1 year. Okay. And here we got 1 year. Apple, apple. Okay, so some of my notes here. Got a lot of drawings. But just to kind of make my point here. So you can see 154. We've got, it didn't get to 160, but this guy's in my way. Up here, it came close. So the yen got close here. You know, I'm just going to remove all these drawings because they're getting in my way. Okay, thank you. All right. So if we go back, you see the yen has, let's see, maybe we go back farther. Let's do 5 year. Here's a 5 year chart. Here's March of 2022 when COVID hit and all the craziness happened. The dollar strengthened, and that drove the index up. So here we're at, things were already getting hot here. We had intervention here, came up, intervention again, intervention. So the Japanese yen is very keen to intervening when it gets too weak. Well, guess what? Here we are again. So if you're a yen trader, this is the, that's supposed to be an arrow. Fix that real quick. That way I can save it for our next video. We can refer back to it. But we may see something like, because the yen is just going to keep on having the same problem, because oil prices that are going to probably be higher for longer, because it's going to take some time for the logistics and the system to get back to production though how it was before. Okay, I'm going to save this chart here for now, refer back to it later. All right. Now, let's see. So remember I was talking about people selling the AI, rebalancing them. So that's what we saw today in the cash market between 8:30 and 3 p.m. That's where most of the liquidity is and things happen. U.S. banks benefit after tech pause. Reference to Broadcom. We saw the interview earlier. This cyclical rotation, that is a positive sign for the economy when you see a cyclical rotation into cyclical stocks, ones that do well when the economy does. They're saying there's more to go. Banks sharply outperform in the U.S. session today. See, the yen, the Korean won get weaker. Same thing with the Indian rupee, and what was it? It was K2 Katiana was saying that you want to buy the dip on those. Okay, the Dow hits all-time high. Old school stocks get allocation. So that, remember, the selling AI and they're moving money into these other sectors, and so the breadth is broadening out. That's a positive signal. We got NFP non-farm payrolls tomorrow. Analysts expect 88,000 jobs to be added to the economy. So we'll see how that works out. Bond market bracing for the news. Okay, so tomorrow morning we'll be watching for that. let's see, Hezbollah rejects truce. First of all, how is Hezbollah even like in a position to say anything? That's what I want to know. I'll have an answer to that in our next presentation. Say it's Thursday, so we're not going to have one tomorrow because the markets will be closed on Saturday. So Friday, there's no trading ahead of the day, so on and so forth. But look for my presentation on Sunday because that's when the trading week starts. So morning call Sundays at 7 p.m. Watch for my video. You don't want to miss this if you are a trader because you can make money. And but make sure you know what you're doing. If you're an actual trader, you're going to be like, dang, this guy's point on. But most people are going to be like, what the hell is he talking about? That's why I'm shocked that I don't get more views because, I mean, my prop count is up 70% year to date on like half of the margin. Of course, that could always change, past performance doesn't guarantee future results. But, I mean, if you go back and look at all my videos, you can see I've been very consistent. You think I'd be blowing up with likes, but whatever. I also do this program not for likes. I do it for my clients to inform them. I do it to provide a record of due diligence. If someone ever questioned my methodology or my competence for some reason, even though I'm board certified 20 years, I have my own firm, blah, blah, blah. I could just refer them back to my videos. It's public. Anyone can go on there and be like, oh, never mind. This guy knows what he's doing. Anyway, where was I? Let's see here. Okay, back to Japan. Okay, we're talking about buying the dip on the Nikkei, the Kospi, Singapore, Indonesia. Okay, going back to Japan. Weak yen, great for tourism. Oh yeah, if you're planning a vacation, I wouldn't normally recommend you go international right now with the way the world is crazy. But Japan is an exception. That is an excellent place to go right now. They're a U.S. ally. They're a safe country. They're respectable. There's a lot of culture there, a lot of history. But the Japanese yen, as you saw, is very weak to the dollar right now. So if you went over there, your dollar would stretch a long way. You'd have a great time. So I would advise you to consider your vacation to Japan this summer. And there's a saying, it goes, sell in May and go away. It's an old cyclical, and it over time is proven true. But sometimes the sell in May doesn't happen until like June or July. Looks like we might be seeing this. And, that doesn't always happen. Again, past doesn't equal future, but it's something to take into consideration. By now, managers like myself, especially if you're up like 70%, you might just want to hang your hat up and call it a day for take a sabbatical or something, sit on those gains, come back fresh. Someone could, with 70% year-to-date return and it's only June, you could just call it a year, do nothing, and still have an outstanding performance. But that's not how we work at Whitney Financial. We just, once we're sitting on some nice gains, we mitigate by lowering our margin policy. So we change to capital preservation mode, so to speak. But we're still, have our radar open for opportunities. But we lower the risk level at that point. Makes sense. Because remember, it takes 100% gain to break even from a 50% loss. So losses hurt twice as bad as gains feel good. Similar in physics. Most of physics equations have a squared in them. So if you're like measuring amplitude, you would use potential squared, because for something to recover, it has to double squared. So that's what, they use that for the same thing applies in general in stocks. If you have $1,000 and it's gone down 50%, you go back up 50%, you only have $750. You have to go back up 100% just to go from 1,500 back up to 1,000. So the name of the game is not it's not losing, especially when your time frame is shorter, like my clients who are retired and can't afford a big loss later on. So distribution of income and a early loss, you're forced to take money out while it's down and it never recovers. And so we're very keen to avoid that scenario. We can avoid all losses, but we do have a great track record of doing that. And that's because as an advisor, I manage the portfolio. People say, well, why don't you just allocate the management like most other advisors to third-party money managers? Well, just look how well they did in 2008. Yeah, they're gotten so large, and it's so annoying when they say, "Oh, you can't time the market." That is such a lie, because these big companies couldn't time the market if they wanted to. They're too big. If they tried to sell, it would wipe out the market maker's inventory, and the bottom would fall out. There's not enough stocks, even if they wanted to. So it just, when I see that, I'm like, God, they're so unethical to say that. You can time the market. If you're a small independent proprietary firm, especially if you can trade in the aftermarket, where most of the gains, just Google what percentage of market gains are made in the aftermarket. These big companies can't trade in the aftermarket, but my little prop firm can. There's plenty of liquidity. We don't even scratch the surface. And so that gives me a major competitive advantage over the big companies. They don't tell you that. That should be a risk disclosed. There should be a disclosure. As a very large company, we've become too big to be able to properly manage our portfolios. And so we are letting you know that there's a big 2008 crash. We're not going to prevent that from happening. You're just going to have to take the loss and write it out. Well, they don't say that. It's wrong. Anyways, moving forward here. Now, another thing, most advisors don't know how to manage portfolios. They're great at relationships, but they outsource that to the firm or to third-party money manager firm. And at the end of the day, though, it's their reputation that's on the line. They're responsible for those accounts, even if they are an investment advisor representative of an investment advisor firm, investment advisor representative of an investment advisor firm. At the end of the day, they're still responsible for those accounts, even though they're being managed by a firm, because they're still independent, but the firm is also liable too. So at the end of the day, you might as well be managing your own client portfolios, because if you're a practitioner like me, it doesn't matter if you're with a firm or independent, you're still going to be responsible for that. But if you're independent, you don't have the conflict of interest of the firm. The firm's just going to tell you, oh, you just hold on to it, to your clients, you can't time the market, blah, 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 blah. And that's just bullshit. Okay? Anyway, I just want to point that out to y'all, because that's not true what they're saying. Okay, back to the news here. We got the interview here with Katiana. Crude oil, that's affecting the yen. We got the new Japanese Bank of Japan governor Takeyachi. Remember I was saying it was a widowmaker trader because the prior governor was Governor Kuroda, and he'd come out, and it was a big joke because they would show pictures of him going ha ha ha, like laughing like in a diabolical way when they went in, but it really did wipe out FX traders. So now people just get out. They don't mess around. And 160, we're done. Call it a day. All right. U.S. Iran rejected by Hezbollah. Okay, we talked about that. Zelensky open letter to Putin. Ceasefire. We talked about that. See, the Cosby is down in overnight after the chip maker slump. Talked about zero hedge, Lebanon versus Israel, Germany, France, and UK, E3 group are trying to negotiate this trade deal. So that's what we got for today. I think that we can expect some downside tomorrow in the stock market unless the U.S. payrolls numbers come out better. Being that the U.S. payrolls is controlled by the U.S. government and often is later on revised, there's a good chance that we're going to get a good payrolls number anyways, despite it, as probably a way to mitigate this AI rotation. So I would expect a good payrolls report tomorrow on that. Mark my words on that, y'all. Hold me to it. Post in the comments and say, hey, KW, U.S. payrolls came out. You're right. I'm not trying to be right all the time, but I'm doing my best to be. And in life, there's no guarantees except for death and taxes. So the only thing we can do is do things that we should be doing to get ourselves to where we need to be. And on that note, I am done with today's session. Thanks again for viewing. I appreciate it very much. If you would please, I would ask you very kindly if you would like and subscribe. Please post a comment. It helps the algorithm. And I will see you on the next video. KW signing out. Now, how do I turn this thing off? I can figure it out. There we are.